What is up, crypto community? Welcome back to another video. Thank you for joining me. I want to talk about a very big update coming to the XRP ledger and then some general macroeconomic conditions in the market right now. It does look like on the daily chart that Bitcoin is jumping a little bit, but that happens after you see a dump. And I want to talk about some reasons why I think there could be more of a dump on Bitcoin, which ultimately will affect the rest of the market. And there's a new update on the SEC lawsuit. SEC argues it's proper to discover these things, claiming that both sides acted and spoke together as if it would happen. Also, the SEC tried to get in 2021. Ripple acknowledged post-complaint price could be relevant, so maybe not so irrelevant after all. And although Ripple argues their finances are irrelevant to assess the penalty size, the SEC says courts consider a wealth for deterrence, even if Ripple can't pay. A big wallet just means a bigger sting may be necessary. Ripple says they now follow the rules, but promises are cheap, and the SEC wants to see receipts and judge for themselves if they have really stopped selling XRP to institutions. Finally, remember those pre-lawsuit agreements Ripple made? Even if they had conditions, turns out the law considers them sales. The SEC wants to peek at Ripple's post-complaint earnings from those deals because profits from them might need to be returned. So just think about a company like Ripple. Hundreds, thousands of employees, billions of dollars of cash. They have this successful SEC lawsuit that says they cannot sell XRP to institutions anymore. Why would they then jeopardize this positive outcome by then doing the exact same thing that they were told they couldn't do? Doesn't make much sense, but I just wanted to include that because it is a development in the Ripple lawsuit. And speaking of this big update coming to the XRP ledger, it's called an AMM. An automated market maker. There's currently 21 yes votes. And so there's only 7 more validators that need to vote. It's a 60% consensus right now. But what is this automated market maker and why is it so big for the XRP ledger? Unlike traditional automated market makers in decentralized finance, which operate based on smart contracts, the XRP ledger automated market maker is integrated directly at the ledger's consensus layer and protocol. This approach promises to revolutionize the DeFi landscape by offering enhanced transaction speed, as if it wasn't fast enough already, reduced operational costs, and greater efficiency through innovative liquidity pool management. A recent study called Automated Market Maker on the XRPL, conducted by Nanyang Technological University and University College of London, offered a few profound insights, demonstrated improvements in slippage reduction, price synchronization, and overall operational efficiency. Essentially, this automated market maker in the current markets, when you look at something like Bitcoin or a lot of these big stock indexes, you have big hedge funds, big whales that are the market maker. In this new update that's going to probably get passed, we'll just have to see if these last 7 votes are positive or not. It's going to increase operational efficiency on the XRP ledger, and it's something that every blockchain can benefit from, but it's not super easy to incorporate into a lot of blockchains. A quick update here on Gemini. Gemini was out here tweeting about XRP recently. They said they're excited about XRP, all this stuff. It turns out Gemini is allowing leverage trading. That's what a perpetual contract is. I don't recommend leverage trading or trading to anyone. 95% of people will lose. But this whole Gemini Twitter thing talking about XRP turned out to just be advertising to get more people to trade on their platform and to lose money. Now, before I talk about why I think Bitcoin and crypto has a lot more downwards action to see, if you guys need a spot to get XRP or other cryptos, I recommend Uphold. It's sleek, it's simple, it's secure. If you want $41 for free, sign up with Webull, deposit a penny, and you're guaranteed $41 in free stocks. Sell your stocks, close your account, do whatever you want with that $41, but you can find Webull and Uphold in the video description below. This is from 9 hours ago. Bitcoin rides a new $600 million grayscale Bitcoin offload, with Bitcoin eyeing a 2-month low. Essentially, all of this unlocked Bitcoin from Grayscale, and Grayscale still holds over 500,000 Bitcoins valued at around $25 billion. The reason that Bitcoin has been going down is because that 25 billion of Bitcoin in the Grayscale Bitcoin Trust could not be unlocked until January 12th, 12 days ago. So when it became unlocked, a lot of that started flowing to Coinbase and other exchanges and being offloaded. And the price would have dumped a lot more, but you have all these ETFs and hedge funds like BlackRock buying up Bitcoin to back their exchange traded fund now. So eventually Grayscale will stop having to sell Bitcoin. However, they still have 25 billion in Bitcoin, which is a lot of potential sell pressure. And then on top of that, guys, Mt. Gox. If you don't know about Mt. Gox, basically, I think it was 2 Russian hackers hacked Mt. Gox. It was the first exchange to buy Bitcoin in history. It actually was, Mt. Gox stands for Magic the Gathering Exchange. Magic the Gathering is kind of like Pokemon cards. It's a trading card game. And for some reason, it morphed into this Bitcoin exchange. And it was the first one ever, and these 2 Russian guys hacked Mt. Gox for billions in current Bitcoin value. Billions of Bitcoin, right? People thought that was never going to come back. It turns out these 200,000 Bitcoins are going to get repaid. And a lot of these people have moved on. This happened almost 10 years ago now. I imagine a lot of them will want their Bitcoins as they're in a lot of profit and will sell them. But this is just more sell pressure on the Bitcoin price. This is in addition to 600,000 from Grayscale, and Mt. Gox has 200,000 in Bitcoin. So we're talking over like $33 billion of potential Bitcoin that could get sold. Now, of course, not all of it will get sold, but these are the reasons why I think we could see lower prices. That's just so much Bitcoin getting unlocked. And whenever you have liquidity in the market that's been locked and it becomes unlocked, people typically sell, right? Because you can always buy, but when it's locked, you can buy more, you just can't sell, right? So it's a lot of sell pressure. And a little positive note, though. So 4.5 billion in Bitcoin options expire this Friday. And typically when you see options in the Bitcoin market expire, you'll see a bump on the Bitcoin price. Bitcoin is at 40K now. It did touch all the way as low as 38K. Today's what, Tuesday? Wednesday morning. But over the course of the next 72 hours, we could see a little bit of a relief rally on Bitcoin. I want to leave you guys with this 3-minute clip from this really good technical analysis guy on YouTube. He's also on Twitter. His name's Josh, and he just has some really good, valuable information. Take a listen.
Ultimately, the 200 week is at 30 and change if we get super angry. And if we zoom out a little bit, in 2023, we had several taps of both the bottom of the cloud and or the 200 week moving average. The biggest and best move we got was based on breaking above all of it, right, at 28K, which is another reason why 28K was such a big deal at that time. So this is the best long trade. Anything were much lower than when I made this chart, a few cloud and or the 200 week moving average. The biggest and best move we got was based on breaking above all of it, right, at 28K, which is another reason why 28K was such a big deal at that time. So this is the best long trade. Anything in here, right, you're guessing when GBTC outflows stop. You're hoping that you catch a knife. I hope everyone makes all the money. I'm just saying, look, there's plenty of reasons why now's not the time to be on the long side for Bitcoin. All right, let's talk about macro now. Not much as far as data this week. We've got PCE at the end of the week. And again, for me, not much else that's super important. Q4 GDP preliminary, sure. Truflation's come down sub 2% now, and it's been holding sub 2%. And this is where things start to get interesting, because how restrictive does the Fed want to be? Again, somebody please ask him that at the next press conference. Where do you want to be, and what are we looking at here? Okay, you got 10,000 metrics to choose from. Pick 5 out of a hat. Just let us know. What levels are you looking for to cut rates? Or do you just want to remain restrictive? You know, they're going to say employment's fine and we don't want inflation to come back. Okay, but there's a tipping point here where if we remain overly restrictive relative to inflation, year-over-year inflation, not, purchasing power. Purchasing power is wrecked, okay? But inflation, if this dips much lower, it almost guarantees a reaction from the economy. So this is part of the whole soft landing narrative, right? We got to do our best to navigate in and around that. The rent stuff has come way down. Now, this is lagging. I don't know why they use a lagging component still in CPI, but whatever. Eventually, this is going to work its way through the system. This is a massive drop in new tenant rents prices. So next month's CPI print for this month is projected to be slightly under 3%. The last CPI was 3.4%. To me, that would qualify as good news, which the market may not like, because that may mean higher for longer. But again, it depends on how restrictive does the Fed want to be here. PCE trend as well is headed in the right direction. Again, we're getting a PCE print this week, so we'll know more on that front. But based on the metrics that people think the Fed cares about, we look pretty good all around to just start cutting based on being overly restrictive. The next CPI print is Valentine's Day, February 13th. That is after the next Fed meeting, which is at the end of this month. And then the next Fed meeting isn't until March 20th, right? So there's a lot of time between those dates for the Fed to figure out what the heck they're going to do here. Likely we get some cutting in the middle of the year, just based on being overly restrictive. That'd be my guess. The other components of inflation, gas prices have remained flat and down. If you look at US oil on the bottom panel here, technicals starting to curl up a little bit. You could say Middle East stuff. You could say OPEC cuts finally taking effect. There's an inverted head and shoulders argument here. There's a, edge to edge argument from 76 to 81 or whatever that is. The top here is the SPR, which we're slowly but surely refilling. I'm zoomed way in because you have to. If you zoom out, we have long ways to go to fill this thing up. Okay. But we are filling it up. So that's that. Another interesting stat, talking about EVs, which seem to be all the rage. It's certainly cheaper to fill your car if you're an EV, but it's the other concerns. It's the other repair